All right, Ken Orange Theory Trader back with you with another video, just talking about lazy trader method and one trade and how it can make you 500 bucks a week. So the things we need to understand and the things we need to see are understanding margin and appropriate account size, pip value, scaling in for low risk, high reward trades. Okay, if you want to. So first off, the margin requirements and your account size. So here's the deal: you do need, okay, unless you already have a lot of money, which most people don't, to trade, a high leverage broker is ideal here. We're talking about at least 1 to 500. Some brokers I've seen offer 1 to 1,000. My broker, which I do not recommend, don't ask me who I use. I don't recommend anybody. I use 1 to 500. Okay, so this is how much money. Here's how to read this. First off, we have the quote currency, which is the second currency in the pair. So this will be something like GBP CHF. Okay, any pair that ends in CHF, that ends in CAD, that ends in AUD, NZD, USD, JPY, or Euro Pound. Okay, this is how much money you will need in your account. Okay, to make $1 per pip. Right. So if you have 13 bucks in your account and you're trading a pair that ends in CHF, you'll be making $1 per pip. Okay, so you can take a position size that will allow you to get $1 per pip. $2, $3, $4, okay, etc., etc. You just add 13. It's rounded, and these are ballpark. These aren't exact figures, but it's enough. So in essence, if you want to make $5 per pip trading a pair that ends in Swiss, you need a minimum of 100 bucks. And over here, obviously, depending on the pair, the margin is different. One thing I have noticed: the more volatile the pair, the higher the margin is. Because I mean, if you could, well, I don't have to get into all that. So anyway, so because of this, keep in mind, if you don't have 300 bucks in your account, you're not getting $5 a pip on a pair that ends in AUD. It's just not happening. All right. So, but these are the numbers. You can take a screenshot of this, write this down. But again, this is for 1 to 500 leverage. Okay. So, yeah. So based on this, some pairs may not be worth trading. Okay, they just may not. It just depends. You just have to depend on what your account is. Now we want to think in terms of pip value. If you want to make an extra, we'll say around 500 bucks a week, trading for $1 a pip probably really is going to get you there. Around 2 to 4, you may be able to get there, but account margin does vary, as I just showed you, per pair that you're trading. So let's walk through some numbers so that we can use our capital to possibly scale in and maximize our gains. So here's the whole picture. I'm going to walk you through this. This is very simple. It's just simple, basic math. So let's say we want to trade a pair that ends in dollar, euro dollar, okay, or pound. Let's say pound dollar, all right. And we have $100 account. How many entries can we take? Okay, so if we want to make $1 a pip, we just take 100. We know that $1 a pip, you have to have $20 worth of margin available. 100 divided by 20 is 5. I can take 5 entries and get $1 per pip. Okay, with my $100 account. If I want to make $2 a pip, that's 40 bucks worth of margin. I can take 3 entries, and so on and so forth. All I'm doing is just dividing. And obviously, if I want to make $5 a pip, I can't take any entries because it's too much. I need at least $320 in order to do so. So it caps out at really $4. Well, not even $4. It caps out at $3 a pip. If you wanted to go all in, you could take one entry with $80 worth of margin. You got $20 worth of margin left, but you could, in theory, be making $3 a pip with one entry. All right, I hope that makes sense. But again, I'm just dividing my account balance by how much margin I need to make $1 per pip, $2, $3. That's how I look at it. All right, so that's that. So these are the number of entries that we take if we want to scale in. So based on the numbers, the max that I could take on this is 3 entries at $2 a pip. Okay, right here, I could take 3 entries that require $40 worth of margin. Okay, and that would give me $2 per pip per entry. Okay, so hope that makes sense. Now, how do I get to 500 bucks though? All right, so here's how you figure that out. First off, you got to know where you want to get. So you want to make 500 bucks. How many pips does your pair need to move in order to get that? We'll just say around 80 pips. All right, it's not, for in this case, it's not going to be a perfect 500. Rarely is anything perfect. So if a pair moved 80 pips and we were getting $2 per pip, that would be $160 per entry. And I can take 3 entry. So if we have 3 allowed entries times, I put 150 because all the entries aren't going to be in the same place. They won't be equal. So I just averaged it down a little bit. So I said about 150. So give or take around that range. Okay. Again, it's going to be about 465 if I max out and take 3 entries at $2 a pip and get 80 pips. Okay, so that's what I'd be looking for. Now, an important thing you want to do is check the ATR, or it's called the ATR or the average daily range, ADR, ATR, same basic thing. Okay, and see how often or how far does a pair move in each day. If you're looking at a pair that has an average daily range or average true range of 30 pips, don't expect it to move 80 pips just because you took a trade. The chances of that happening are slim to none. Okay, so be realistic. Okay, so let's put it all together. If I have a $100 account, I can take 3 entries and get $2 a pip per pip, and it needs to move about 80 pips after I get in. I should make about $465 in one trade. So, does such a move exist on a GPP or a USD pair? Here's one that I did find. This is on, I think, December 3rd, I think this is, of 2025, last year. Okay, so I recommend strongly, if you're going to try this and take the one trade a week model, just trade the daily chart, daily CRT, daily candle 1, 2, and 3. Because why? A pair moves farther in a day than it does in 4 hours. Okay, so trade the daily. All of these are going to be based on daily ranges. Okay, so you have the daily CRT range. This is a 1 a.m. candle range setup because I do trade the 8-hour chart. I look at the 8-hour chart for entry. So I start trading at 1 a.m. and 9 a.m. In this case, it was the 1 a.m. that paid the best. So 1 a.m. Would have been the first entry right here, right as the candle opened at 1 a.m. Just take it, okay? Because I'm looking at the 8-hour intervals, okay? So that's first trade at 1. Entry number 2 could have been right here at about 1:55, about an hour later, and my last entry a little over 30 minutes later at 2:25. This trade here may have had a little drawdown, but at the same time, eventually price did go the 80 pips by 10:55 a.m. So that's how that worked out. Now let's try another example with the yen pairs. Okay, so first thing I need to do, okay, so if I'm looking at a pair that looks good and it ends in JPY, to make $1 per pip, I need an account of at least $21, and then just double it, so on and so forth. Okay, so that's that. So you got to know, okay, how much money do I have, and how much can I afford to take per pip, right? So that's how that would go. So let's say I have an account balance of $200, and then I just have my $21 gives me $1 per pip, 42, yada yada yada. All those numbers are just doubled. So I could take 10 entries at $1 a pip if I wanted to, or I could max out at $4 a pip with just one entry. Just you do what works for you, right? You don't have to max out the account. Okay, you just look at these numbers to see what's available to you and take the appropriate amount of risk. You're not risking the whole 200 though, too. I want to make that clear. Maybe you're only risking 50 out of this 200 to try to make, but would it be worth it to you to risk $50 to try to make $450? I think so. That's a good risk to reward to me. So let's keep going. So let's say I want to risk, I have the $200. I'm going to risk 2 entries at $3 a pip. Okay, I got that from right here. Okay, $3 a pip. I need $84, and that'll give me 2 entries worth $3 each. Okay, for those 2 entries. All right. So let's see. The pip move I need is about 80 pips, and if it hits the TP, that'll be about $480 or so. So does that move exist? Here is one. Again, same thing, 1-hour candle. I'm sorry, the 8-hour candle based on a daily range at 1 a.m. 1 a.m. is probably going to be your best bet because you're expecting the pair to move in your direction most of the day. So if you're trading this method, I recommend doing starting at 1 a.m. Eastern Standard Time, London, tail end of Asia, London session. All right, so best entry would have been at 2:25 a.m. That could have been entry 1. And then entry 2 could have been around here at 3:35 a.m., right as London gets going. Both of them did hit take profit for 80 pips apiece, and they hit at 8:20. So near the USA session, you see it spent the rest of the day consolidating. So I would strongly recommend setting a take profit for these if you want to trade this, because this is only one trade. So you don't want to be in profit, hit your profit target, and then try to get greedy and say, well, maybe I can make 1,000. No, this is just one trade a week. You take it and you're done. All right, so that's it. So here's one last suggestion you can consider, which is the all-in model, where you just max out, and we're going to try it with the Aussie. All right, so I look at the Aussie, and obviously we need $296 to make $5 per pip total. But you see, Aussie is one of the more expensive pairs to trade, Aussie and New Zealand, and they're very volatile as well, so it makes sense. Okay, so let's say we have a $300 account. And we'll see here, the max we can do if we maxed out our margin will be 1 entry for $4 a pip. But remember, I'm not risking $300, right? I'm just risking $4 a pip. So if price goes against me 10 pips, okay, 10 times 4 is 40. So if you want to do like a 10 pip stop loss, that would be a $40 risk. If I want to do a 15 pip stop loss, 15 times $4 a pip is $60. All right. Is it worth it to me personally? Would I be willing to risk $60 to try to make $500? I would take that all day, every day. That's just me though. Okay, out of 300. Okay, let's be clear on that too. Okay, out of 300. But let me go back here to this. Okay, all right. So let's keep going. So putting all together for Aussie, we have a $300 account. We want to take one entry at $4 a pip. To get to 500, we need a 125 pip move. Okay, does it exist? This one hit at 205. This is one, I don't know what month this was. Actually, this was just this past week. This was January 28th of 2026. So if you want to look at it for yourself, feel free. The entry was at 2:05 a.m. and price just spent the most of the day falling down. All right, and that was it. Okay, so at $4 a pip, $4 times 125. Let me check my math again to be sure I'm not misleading anyone. Yes, $4 times 125 is $500. This is $500 you're looking at right here. If we double the account size, that's $1,000 we're looking at right here. Okay, if we double it again, it's 2,000, 3,000. Always think scale. Okay, but these moves do exist. If you catch one a week, you're doing okay. $500 a week is $2,000 a month. It's not a bad living. Not a bad living for a side income. Let me say that. I'm not saying you can. Well, anyway. So in conclusion, trade the daily Kelvin Rage theories. Okay, trade the daily. Don't do 8 hour. Don't do four. Definitely don't do 4 hour. Okay, price moves farther in a day than it does in 8 hours or 4 hours. High leverage brokers are going to be the key to using this method. Unless you already have a lot of money, then you don't need as much leverage. Taking one trade a week can be much less stressful. All you need is one successful trade. So what I would consider, if you want to start with this method, maybe take some of your profit and start a little day trading scalping account, but keep a bread and butter account just to keep the lights on, let's say, or pay some bill, a conservative account that you use this model for. That is just one trade a week. So one thing you could do, okay, I got my one trade a week, I knocked that out, I got my profit. Okay, so that's good. I keep that over here. And then for everything else, I have a little bit of a high risk account. I want to do some scalping, et cetera, et cetera. You got a whole other account for that. So maybe you can do something like that. All right. You do not have to max out the account if you just want to stay with $1 a pip. Like let's real quick right here. If you just want to stick with $1 a pip and take those right here. Sorry, let me go back a little bit. Right here, see, at $1 a pip and a $200 account, you can take up to 10 entries. You don't have to take all 10, but you can scale in up to 10 times. But say if you only want to scale in 4 times, that's fine too, at $1 pip per pip. All right, just be sure to keep your risk in check though. It's still about risk management at the end of the day. Let's see. So because some pairs do require more leverage than others or more money than others, they may not be worth trading as well. Remember those low ATR pairs? They're not worth trading unless you can get a high pip value. What I mean by that is this. Let's say you have a pair that only moves about 35 pips or 30 pips in a day, a whole day. If you can get $15 a pip on that pair, 15 times 30 is $450, but you just have to have the margin available. So, but keep that in mind. But remember, we can't manage risk. Whole thing is just going to be a rat race, a boom and bust. You're going to be making more deposits than withdrawals. And everybody who can't manage risk, all you're doing is making your broker richer or your prop firm richer. They love it when traders can't manage risk because that's what keeps them in business. All right. They'll gladly take our money. I'm including that myself in that equation as well. Okay. But if you can manage your risk and make more withdrawals than deposits, then for them, you're just the cost of doing business. Right. So, but again, one trade a week, this is the model to do it. But it does start with understanding. I'll go back to this screen here. This is probably the most important screen here. All right. And if you want to make this on your own, you can screenshot this. But all I did, once you can figure out what one pip is, and the not the broker I used, but the platform that was good for this, that helped me figure this out, was TradeLocker. Once you know how much one pip is, then you just double the numbers. That's it. You only got to figure out how much it is to get $1 per pip. Just start there, and then all you got to do is add. That's it. Just common sense. All right. You just add. If I want one, and then one doubles 2, and then I add one more, and that's it. You just do it once, and then you never have to do it again. Okay, but get this understanding. You need to understand how the money works. Okay, because if you've been making money here or there without understanding this, to a degree, you've kind of been getting lucky. But now that you can arm yourself with more knowledge and information, you can move more sagaciously or with more wisdom and really, really change our financial situation. So I appreciate you watching. I appreciate your time and attention. Have a great rest of your day. Don't forget to like the video, subscribe to the channel. And thanks again. Have a great rest of your day. Take care.